value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks for having me.
Well, the NASDAQ keeps being brightly green on the Bloomberg chart or dashboard, whatever you want to call it on TV. But other stocks are just sitting there, some even declining. Is this kind of the calm before the next big storm?
Well, I think that it is, Jim, and it's been one heck of a calm following that March low, which I think has served its purpose well. It's kind of lulled people back to sleep, but in reality, what we have with, you mentioned the NASDAQ with the new high, is we have this massive non-confirmation, if you will, between the NASDAQ and a few of the high-flying stocks like Apple and so forth. And I think that what that is telling us, there's some longer-term cycles that that divergence is in association with. And rather than looking at that as a positive development, I'm looking at it as a major warning. I think that we have seen on the industrials, I think we have seen a 4-year cycle top. And that, as we said, coming out of the March low, it's gonna, there was some clustering of cycle lows there. I think they're counter trend. And, it's gonna last until we get the setup to turn it. Once we get the setup to turn it, then I think the calm before the storm will be over, and we should see fireworks there, if that structure continues to hold. Absolutely.
Now, would this storm be equivalent to the giant decline we saw back in March, or would it be a minor correction?
Well, if it's truly the calm before the storm, well, there's a minor correction coming. We're at a cyclical juncture here where there should be a top and an intermediate degree decline. You kind of got to feel your way along. I don't know what the structure is going to bring as we go into that intermediate term low. I mean, if we see enough of a structural setup, it could cap the overall advance. But I do think that we go down into an intermediate term low. Like I said, I have to look at the structure once that low is in place and what it yields. But it's setting up seemingly for a low and then some sort of an optimism rally into the election period. And then, as I'm looking at it, if, this scenario is on track, then once we get into that period or just past that period, then I think that next intermediate term advance should roll and then leave us set up for a continuation of what started back in February.
With the election literally less than 3 months away, do you think the Fed and Congress, the Senate, are going to just pump as much money as they can into the market so it looks like everything's going well into the vote?
Of course. I mean, that's always the game. And, one of the questions comes up from time to time is about the manipulation of the market and that sort of thing. And I'm writing a little bit about that in the letter this month. But, I don't remember, I'm trying to remember now if I've said it, as we were going into that low or coming out of that low. But, one of the factors always, giving this manipulative world that we live in is, the powers that be can control, to some degree, the market until they can't. And one of the biggest tools that they have is the illusion of control. If you perception is reality is what I'm trying to say. And so, yes, they do have some degree of control, but ultimately, when the market, when Mother Nature takes over, I should say, and the setup is in place, then, there's literally nothing they can do. So I think that, yes, right now this is the calm before the storm, to use those words again. The illusion is that the Fed is in full control, and to some degree they are in control. But then, once we get the setup, then that illusion of control, I think it's going to be revealed that there is no control, because, as I see this is an enormous unwinding that is taking place. And it's been, we watched for since 2015, 16, this thing is just pushed and pushed and pushed into the biggest bubble in stock market history. And the fact of the matter is that it's all been done on the back of, I call it what it is, fake news, falsified, misleading, employment reports, and so on and so forth. And so it's just all been one big giant manipulative bubble, or one big giant manipulative scheme, if you will, that has led to the bubble. And now it's trying to come unraveled, just like, we talked about all along. And yet we have this, we're caught with this counter trend rally. I think that was the opening shot that we saw back in February and March. And now it's a matter of how long can it be controlled or held, or the perception of it being controlled and held, before we get the setup. And then once that happens, it kind of concerns me, because look at how the world changed and what happened in the wake of the setup back in February. We watched blow by blow as the structure fell in place then, and then out of the blue comes this, this COVID thing, and look at the transformation of this country just with the leg one down. And so imagine if this really is what I think it is, and we set up here, and this is the calm before the storm, and we see the next leg down. I mean, it's kind of frightening when you think about, well, what could come from that? One of the many things I'm looking at, without getting into the politics, is, I've known this for years just from reading the material and understanding history and that sort of thing, is, I think there's a political crisis associated with this. I knew that there was some civil unrest type issues and going to be associated with it. And I don't think that we've even seen the tip of the iceberg there. So I think we're in for a ride. I really do. This is going to be ugly. This is very serious what's going on. And a lot of people think, oh, well, it's all just going to go away in November. But this is much bigger than that, I think. And I don't believe it's going away in November.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the story with gold?
Well, gold, as you know, has continued to press higher and higher and higher into the 9-year cycle top. We saw it first try to peak, I think it was back in 17 or 18, and then the setup never quite materialized, and it pushed again. It started, I'm not looking at a chart, in mid-19, we got this last push up. And all of the worrisome signs that something wasn't right with a lot of the non-confirmations and along the way have been there all along, and they still are. And I have said, and I'm still in this camp, I mean, while this advance on the one hand with gold has gone on far longer than anticipated, because again, there has been warning signs along the way. It's been telling us that something's not right. But at the same time, we haven't seen the structure bite to cap it. So, I think that we are pushing into a 9-year cycle top. All these warnings, that have been in place all along, and I'm talking about it in some detail in the letter this month. Once we get the structure in place, then I think there's going to be a huge surprise in gold. There was a little bit of a surprise earlier this week with that, what was it, about 100 and, I don't remember now, 109 or something like that point drop in gold. But I think, again, I think that was just an opening shot. There was an intermediate term cycle top due. That's in place now with that. And we need to see what further develops if we have that higher degree top. I know that people are very, very bullish on gold, and the perception is that it's going to the moon, but then that's always the perception. And I maintain that gold is setting up with, or in close proximity. I mean, it's not going to be with the top tick, but I'm saying that all asset classes, I think, are setting up in a general sense to peak in close proximity with one another and all come down together. So I'm looking for gold, commodities, equities, and everything to peak and come down with this next leg.
Why has oil remained so strong for so long, considering that people weren't driving anywhere?
Well, I think it's just a technical bounce, a cyclical bounce, if you will. I mean, just like it's the same rhythm as really with equities. I mean, it was so oversold. And I mean, look, my God, it went, I didn't even know such thing was possible, but it went below zero. And, it's a technical bounce. If you look at the longer term work with commodities, everything there tells us that the longer term structure is broken. And like I said, it's just like everything else. It's all been in a dancing to this very similar rhythm cyclically. And I think that, crude oil is going to be among the asset classes that set up in close proximity with equities and everything else to come down together. Will it go negative again? Of course, I'm not saying that, but I do think it's going to come under pressure once everything turns back down.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the U.S. dollar was quite strong. It's weakened a bit. Is that a trend or just a blip?
Well, it's a bit of both, I think. In the short term, the dollar should be near some cyclical turn points where there should be some strength, intermediate degree strength. A little bit longer term, I do think that the dollar, we talked about way back in, I say way back, it's only been 2 years, I guess, but I think it was 18. We talked about the 4-year cycle low that had fallen in place in the dollar. I think that 4-year cycle top is probably in place. There's a couple of exceptions, looking back in history at some of the structural stuff, but I tend to think that 4-year cycle top is probably in place, and so that this counter trend advance, my expectation is that, this intermediate term low that's due in here, I suspect that it may be counter trend. But I need to see what it develops. So I need to see if it's going to be one of those exceptions. But the general answer to the question is that I think the 4-year cycle top has probably peaked, but I don't think that means that the dollar is going to fall apart. I mean, there's a camp out there that just thinks that, the dollar is going to zero and it's no longer going to be the world reserve currency and so on and so forth, and the dollar. I mean, I understand the thinking, but then I don't think that's the case either, because, the dollar is not going to lose this reserve. I mean, there's just no way that I can see that happening. It's just too complex of a thing to happen. The dollar is not going to just crash here, I think. I do think that it's going to remain generally under pressure until we get into this next 4-year cycle low. And then, I look for the dollar at that point to go much, much higher. And we could get into that low later this year, like I'm thinking, probably December to early next year is the next possible time frame in which we could see that higher degree low. So while I guess I'm kind of all over the board with the dollar because there's several different things going on. I mean, longer term, yes, for now, I think the 4-year cycle top is in place. Intermediate term, yes, I think the dollar's bottomed and it's going higher, but then I think that's counter trend and we move lower into, sometime next year into a major low where the dollar, has a fresh 4-year cycle and a much stronger advance.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.